Imagine a company that's not just growing, but genuinely making waves, placing these massive bets on the future of medicine.
Yeah.
We're talking about a firm that just revealed financial numbers. So, while jaw-dropping, they make you stop and wonder, what's their secret?
Right. How do they pull that off?
Welcome to the deep dive.
Yeah.
Our mission today really is to cut through all the corporate buzzwords, the earnings call jargon,
Mm-hmm.
and bring you the truly critical insights behind Laurus Labs Ltd's Q1 FY26 results. They're a really fascinating player in this research-driven pharma and biotech space,
Absolutely.
and we've spent time poring over their earnings call, the press release, the investor presentation. So this isn't just about the numbers themselves.
No, it's the story behind them.
Exactly. It's about understanding this remarkable strategic pivot and these really ambitious investments that look set to redefine their role in global healthcare.
Okay.
So let's unpack these Q1 FY26 results from Laurus Labs, because the headline numbers, they really tell a story of incredible momentum.
They certainly do.
While their total revenue saw a robust, 31% increase year on year, hitting 1,570 crores, the real fireworks are in the profitability.
Oh, definitely.
Their EBITDA, which is a key measure of operational earnings, didn't just grow, it exploded. An astounding 127% year-on-year to 389 crores.
That's a huge jump.
And that translated directly to their bottom line.
Yeah.
Net profit soared by a dramatic 1,154% to 163 crores.
Just incredible percentages.
Even diluted earnings per share, EPS, saw a massive 4,400% jump. I mean, when you see numbers like that, what's immediately clear about how they pulled this off?
Well, what's truly fascinating here isn't just the growth itself, but how efficiently they're turning that demand into actual profit.
Right.
Management pointed to a few key drivers. First, just robust demand for their contract development and manufacturing organization, their CDMO offerings.
Okay.
Second, a better product and segment mix. So basically selling more of their higher margin stuff. And crucially, improved operating leverage, which, to put that simply, it just means as their sales go up, their profits are growing even faster because their fixed costs like factories, equipment, they get spread across more revenue.
Makes sense.
And these factors combined drove their gross margins up to nearly 60%, which is a significant jump, about 4.3 percentage points. And they seem pretty confident they can keep it in that healthy 55-60% range going forward.
Wow.
It's really a masterclass in operational efficiency in this sector.
That's a powerful explanation of the underlying strength there. So for you listening, this really means Laurus Labs isn't just seeing more sales. They're fundamentally more profitable, more efficient than before.
Exactly.
It signals a company that's executing its strategy really effectively, turning these market opportunities into, well, remarkable financial performance.
Couldn't have said it better.
Okay, so here's where it gets really interesting, I think.
Mm.
This incredible performance, it wasn't just accidental, right? It was driven by this clear strategic focus on their CDMO business, which is rapidly becoming their major growth engine. We're talking phenomenal growth here. Their CDMO segment revenue hit 522 crores in Q1. That's a staggering 103% increase year on year.
Just phenomenal.
And if we look specifically at the small molecule CDMO part, that jumped by an eye-popping 130% to 493 crores. What was behind that massive acceleration?
Yeah, that surge was primarily driven by deliveries for mid to late stage new chemical entities, or NCEs.
NCEs.
Right. An NCE is essentially, a brand new chemical compound discovered by a pharma company. It's got potential to become a drug. It's the earliest stage, high risk, but also high reward part of drug development.
And Laurus is right in the middle of that.
Exactly. They're playing a crucial role now in bringing these future medicines to life. And this growth also came from ramping up new manufacturing assets they've got online.
Oh, okay.
They've built a pretty impressive pipeline, too, over 110 active projects. And there's been a significant shift towards big pharma clients. And it's not just about volume. There's also substantial customer interest in their advanced chemistry platforms like biocatalysis, which uses enzymes for greener, more efficient processes, or flow chemistry, which allows for continuous, safer manufacturing.
So if we connect this to the bigger picture then, this CDMO focus isn't just about revenue, is it? It's about Laurus Labs embedding themselves right at the very heart of future drug innovation.
That's a great way to put it.
They're positioning themselves not just as like a supplier, but as an indispensable partner in defining what medicine looks like next.
Mm-hmm.
And they're clearly doubling down on this, aren't they? I read somewhere they have this ambitious vision for CDMO to contribute up to maybe 50% of their total revenue soon, up from 33% now.
Yeah, that's the medium-term goal they've articulated.
But this business can be a bit bumpy quarter to quarter, right? Tied to clinical trial progress and things.
Absolutely. That bumpy nature of CDMO sales quarter on quarter is, well, it's a known factor. It's just because it's dependent on the clinical program milestones of their clients.
Right.
If a trial phase gets delayed or maybe accelerated, it impacts their deliveries for that specific quarter.
Sure.
However, management is very clear that despite these, short-term fluctuations, they expect strong overall growth for the CDMO segment for the entire year. This isn't about small gains. It's a real long-term strategic pivot towards a high-growth, high-value area.
Okay, that makes sense. So that brings us to how Laurus Labs manages its diverse portfolio, because it's not just CDMO, as you said.
Correct.
Let's look at their other key segments. Their bio-CDMO, the large molecule division, reported 29 crores. That was flat year on year and actually down 33% from the first quarter of last fiscal year.
Yeah.
What was the story there?
Yeah, management pointed to some specific, customer-specific scale-up challenges and also a pricing shift.
A pricing shift.
Yeah, apparently as certain biological products mature, the pricing model can sometimes shift from, say, a per month or per batch fee towards a per kilogram rate, and that can impact how revenue gets recognized in the short term.
Oh.
It just highlights, the dynamic nature of this specialized area.
Got it. And on the generics business side, that totaled 1,048 crores, showing decent 12% growth year on year.
Solid growth.
Within generics, their finished dosage forms, or FDF, that's the final pill or injectable medicine, right?
Right, the final product.
That's a robust growth of 50% year on year, especially from their ARV, antiretroviral, and developed market portfolios. But interestingly, their active pharmaceutical ingredients, or API.
The core ingredients?
Yeah, the core chemical ingredients that actually do the work in the medicine, that decreased by 4%.
Yeah.
What's the strategic thinking behind that dip?
Well, this is where their strategic resource allocation really comes into play, I think.
Okay.
That decrease in generic API revenue wasn't really a decline in demand, apparently. It was more of a deliberate decision to divert more resources, more capacity towards those high-growth CDMO projects we were just talking about.
Ah, so a conscious choice.
Exactly. They're prioritizing where they see the greatest future value. And overall, their ARV revenues, if you combine both API and FDF, were still up a healthy 17% year on year.
Right.
And they're guiding for continued strong performance there, even building in a bit of a cushion for potential price drops, which is, pretty pragmatic in that market.
Sure. Sensible.
Their success in winning global fund tenders also underscores their sustained market share in these critical medicines.
Okay, so for you listening, this means Laurus Labs is really skillfully balancing its portfolio here. They're keeping a stable foundation with their established generics business, especially through finished dosage forms, while aggressively investing in and shifting resources towards these higher growth, higher margin areas like small molecule CDMO and, as we're about to discuss, advanced therapies.
It's a calculated strategy, definitely aimed at long-term value creation.
And speaking of long-term value, let's talk about the company's really bold investment strategy. I mean, they're not just expanding, they're making a profound bet on the future, particularly in these advanced therapies.
They really are.
Laurus Labs announced 3 major capacity expansions in Q1 alone, and these sound significant. Tell us about them.
Indeed, it's a pretty ambitious roadmap. First, they're building a brand new microbial fermentation facility down in Vizag.
Okay.
Phase 1, that's got 400 kiloliter capacity expected online by the end of 2026. And this site could eventually expand to a massive 2 million liters. Huge potential there.
Wow.
Second, they're establishing a cutting-edge gene therapy and antibody drug conjugate, or ADC GMP facility. This is a big 6,000 square meter facility in Hyderabad's Genome Valley. A strategic move location-wise, too.
Right. Genome Valley makes sense.
And third, a new finished formulation facility, also in Hyderabad, under their joint venture with KRKA.
KRKA.
Okay. So when you look at the whole picture, they're committing an astonishing 5,000 crores in capital expenditure over the next 5 years.
5,000 crores.
Yeah, primarily funded by internal cash flows, they say. And they're committed to keeping their debt levels manageable, net debt to EBITDA below 2.5x.
It makes you wonder, though, with such rapid expansion, what are the inherent risks they're managing? That scale is huge.
That's a great point. For any company growing this fast, managing that scale of investment, maintaining quality across the board, integrating new facilities smoothly, it's a massive undertaking. There are always execution risks.
Definitely. But let's delve deeper into what these new facilities actually mean capability-wise. That gene therapy and ADC facility in particular sounds like a leap into truly, frontier medicine.
It absolutely is.
What capabilities will it have, and sort of how does Laurus Labs fit into that specific picture?
Yeah, it's definitely a leap. This new facility is designed to handle everything from plasmids DNA, which are key genetic building blocks, right through to viral vectors like AAV, which are commonly used to deliver genetic material in gene therapy.
Yeah.
It'll also offer bioconjugation, which is basically chemically attaching two biological molecules together. That's crucial for therapies like ADCs.
Right, the conjugate part of ADC.
Exactly. They'll also have lyophilization, that's freeze-drying drugs to make them stable for storage, and fill-finish capabilities, which is the final step of putting the drug into vials.
So end-to-end almost.
Pretty close for certain aspects. It's important to clarify their role in ADCs, though. They'll be focusing on the payloads, which are the potent drug components, the linkers that attach them, and the conjugation process itself. They're not planning on manufacturing the full monoclonal antibodies that often form the backbone of ADCs.
Okay, that's a key distinction.
And beyond that facility, their associate company, ImmunoACT, is making real strides in cell therapy.
Yes, immunoACT.
Their next CAR-19 therapy has already seen over 350 infusions for cancer patients, which is significant. And they've even started trials for a new therapy targeting multiple myeloma. Plus, a second GMP facility for ImmunoACT in Navi Mumbai is set to commence operations, adding about 2,500 treatment capacity next year.
Wow, that's scaling up quickly too.
It is. And sort of underpinning all this, Laurus Labs is heavily investing in what they call smart and green chemistry innovation platforms, things like biocatalysis and flow chemistry we mentioned. They even have a partnership with Willow for bioengineering, looking at things like steroidal backbones, pushing programs from lab to pilot scale, and that KRKA joint venture we mentioned. That will focus on high-potent oncology drugs and general oral solid dosage forms.
So when you look at all these initiatives together, it paints this vivid picture of a company not just reacting to the market, but actively trying to shape the future of pharma manufacturing and advanced therapies.
Absolutely.
Moving into truly exciting new frontiers. It really sounds like they're building a comprehensive ecosystem for drug development, piece by piece.
That seems to be the strategy, yeah, a very integrated approach.
Now, underpinning all of this impressive growth and this forward-looking investment is something absolutely foundational, right? And that's their unwavering commitment to quality.
Couldn't agree more.
It's something you simply cannot compromise on in pharmaceuticals. In Q1 alone, Laurus Labs successfully passed 39 quality audits without a single critical finding. What does that kind of track record signify in this industry?
Oh, it's absolutely critical. I mean, that kind of impeccable quality record is non-negotiable if you want to operate on a global scale, especially when you're aiming to attract and keep those big pharma partnerships in the CDMO space.
Right, trust is everything.
Exactly. It demonstrates not just compliance, but a really deep-seated culture of quality that minimizes regulatory risk and builds immense trust. Their one quality standard for all markets philosophy is also key.
Explain that a bit.
It just means they're applying the same rigorous standards whether a product is destined for a highly regulated market like the US or Europe or an emerging market. That consistency is a massive differentiator.
Okay, that makes sense. And as we consider the global landscape, particularly with trends like Make in America potentially influencing supply chains, how does management at Laurus Labs view their position in all that?
They seem pretty pragmatic about it. While acknowledging that some aspects of the supply chain might shift geographically, maybe more towards the U.S. for certain things, management seems confident that the demand for intermediates and core chemistry capabilities, which is really their strength, will remain strong or possibly even increase in regions like theirs, like India.
So they see a continued role.
Yeah, they see themselves as a reliable and critical partner in what is ultimately a globally integrated pharmaceutical ecosystem. This confidence in their quality, their strategic direction, it really underpins their whole plan for sustained value creation.
So behind all the exciting new tech and the impressive financial figures, there's this deeply ingrained commitment to quality and a clear-eyed understanding of the global pharmaceutical landscape. That's what makes them, an increasingly critical partner in drug development and manufacturing worldwide.
Well said. It's the foundation for everything else they're building.
So What does this all mean then for the future of pharmaceuticals and for companies like Laurus Labs? As they continue to expand their reach into these cutting-edge therapies like gene and cell therapy and deepen their role in the global CDMO landscape. How might this shift impact the accessibility, maybe even the development speed, of breakthrough medicines worldwide?
That's the big question, isn't it?
It really makes you wonder, doesn't it, what new frontiers they'll be tackling next and, well, how their strategic bets will ultimately shape the landscape for all of us.
Time will tell, but they're certainly positioning themselves interestingly.
Thank you for joining us on this deep dive. Keep exploring, keep asking questions, and we'll catch you next time.